Hi everyone, welcome to our Fireside chat. I'm Christophe, partner at WENVEST Capital, which is actually a German private venture firm. We invest into B2B software, but we invest in Switzerland as well. Welcoming Patrick here on stage, but we heard the phenomenon of too little or too less people from Switzerland here on the conference, and we have a similar phenomenon with Teylor being a Swiss founder, founding a Swiss Fintech, but why are you actually so active in Germany?
Yeah, thanks, Christophe. So we're actually active in Germany because we believe that the mission or the target that we're trying to achieve is a very big one, and we wanted to take, in a first step, go to the biggest possible market that there is for what we're doing in Europe, which is Germany. So I am Swiss, our headquarters are here in Switzerland. We also have an office in Berlin and a lot of remote staff, in total about 50 plus people. And what we do at Teylor is that we've built a platform that basically tries to automate and digitize the entire credit life cycle of small business lending. And we monetize this platform in two ways. On the one hand, we finance small businesses on our own, primarily in the German market. We do about 20 to 25 million euros a month in lending. And then on the other hand, what we also do is that we license the technology to financial institutions across Europe. So we have about 15 banks, fintechs, alternative lenders who use our tech for their own lending activities, and we process for those a couple of 100 million a month in credit. And so obviously, as fantastic as the Swiss market is, and again, I am Swiss, I love Switzerland, and we are now a little bit active in the Swiss market through a great partner, but we wanted to be big, and we wanted to be big fast, and we knew that if you want to do that, you have to go to the biggest market, at least the biggest market in Europe. And that's why we did it. Okay.
So yeah, over the last 5 years, you have become I would say, the biggest SME fintech player in the German-speaking countries. But please tell the audience, how did you achieve that? Because I think there are still a lot of people out there who have never heard about Teylor before.
Yeah, I think probably the reason why people haven't heard about us so much in the past is because in the first couple of years we just kind of kept our head down and worked. I think kind of our drivers to success have really been that although we're very much a tech-driven company, we're not just a tech company, we're also an extremely sales-oriented organization. So we wanted to kind of build a big platform before we went out and started talking about it. Then this year we raised 270 million in financing from great investors like Barclays and M&G, and that kind of felt like a relatively good point to start talking about what we're doing more and more often, and and that's why we're here today. At the end, why are we able to do and why we're able to grow so quickly? I think also we just have a great team, and that's definitely paid off.
Okay, great. As everybody knows, it's very good and appreciated to celebrate successes, but as a board member of your company, what would you say and tell the audience have been your biggest mistakes in the last years?
Yeah, I mean, there's lots of mistakes, probably more than I could count, and certainly more than I would want to tell you as my board member. But I think the biggest mistake that I kind of have to, or the biggest, let's say, topic or area that I constantly have to kind of keep reminding myself about and making sure that my team is thinking about is that, especially in the current environment, it's kind of this saying or this credo of hire fast and fire fast, as brutal as it might sound. I think all of us here in this room, anyone who's ever worked at a startup knows what kind of a difference it makes if you really have the best of the best people in your team, the people who are perfectly fit for their role, the people that are hungry and passionate and talented. And I think it's very easy, especially kind of when things are going well, and I mean we're profitable, we're making good money, so it's very easy to kind of get into a very comfortable position where you're like, let's leave it as it is. But I think you have to kind of force yourself, force your team, force your staff to really always make sure that you do have the right people in the right roles, even if that comes with some painful decisions. Because not only could you be achieving more, but there's also always a certain opportunity cost of having the wrong person in there. So I think I could have been more aggressive in that regard in the past, and it's definitely something that I need to always remind myself about to keep doing better in the future.
Okay. So maybe if we switch gears to more the market perspective, a lot of fintechs out there are raising and looking for funding. You have now successfully raised a big debt fund. But what is your view on the financing market in Europe or for fintechs in general, and maybe what's your plan going forward?
Yeah, I mean, I think my view is that the market has started to reward a bit different things than it rewarded maybe 2 or 3 years ago. What we did that really paid off with our fundraising was at about, as you know, about a year or 18 months ago, what we said was, okay, let's stop increasing our burn and let's just stay with the amount of staff that we have and try and get to break even as quickly as possible. It worked, so we kept year over year roughly the same cost. So we had a little bit of cost increase due to cost of goods sold, but other than that, team size stayed roughly the same, and we've managed to double, almost triple revenues, and I've been profitable since the summer. So I think if you're in that scenario that we are in, that I know a lot of the other fintechs here are also working towards achieving, it certainly makes it much easier to fundraise than if you aren't. I think that would be kind of my advice to everyone. I think on the private debt side, if you're raising debt funding, it is more challenging because the competition is higher. So today, if you can invest in treasuries and make a 4 or 5 whatever % return with a little bit of leverage, even more, you really have to have a good value proposition and be able to generate very attractive returns to be able to get junior, mezzanine, senior investors. So it's certainly harder than it's been in the past, but the fact that the rates are higher also kind of helps in some regards. And I think that if you're a player out there that's both kind of has a good track record and is profitable, break even, and reliable, that also on the debt fundraising side, that it's quite easy and quite, or not easy, it's certainly not easy, but it's easier than if you're not.
Okay. So yeah, I think you have heard as well that if you explain Teylor to the audience, it feels much that you're a very strong lender in the SME space. But can you explain maybe a bit more where the software piece comes into play?
Yeah, absolutely. I mean, at the end of the day, the software that we've built is the kind of heart and soul of our entire company. With the platform that we've built, we're able to manage portfolios of 100 millions of euros of loans with 2-3 people, which a bank might take the same, might need hundreds of people to do the same work. We don't see ourselves as a lender. We also don't take any balance sheet risk. Fundamentally, what we believe is that the entire market of kind of commercial credit, commercial banking, is kind of in the place where maybe retail lending and banking was 15 or 20 years ago, and it's going to become more and more digital. And what we want to achieve with our platform is that we basically want to be the platform that, whether you're a small business that needs money, a bank that needs to digitize, a private debt investor who wants to get access to the asset class and deploy this capital, that we can be the platform that allows you to do that. And none of that is possible without the tech, and that's kind of the everything that we work towards is building out that platform and kind of fulfilling this vision and trying to be the company that is best profited to take advantage of this market shift, and in the ideal case, across Europe is the one that's trying to shift this market shift. It's also why we're focused on multiple markets. So again, we're not only active in Germany, we're active in Switzerland, Austria, Luxembourg, have first clients also in France, and hopefully soon UK. And we're building really a pan-European company and a pan-European tech platform.
Great. Thanks a lot for listening. I hope you enjoyed it. And thanks, Patrick. Congrats.
Thanks, Christophe.